It is December already. This, of course, is my monthly note. We go over the markets and then kind of interesting things that you should be thinking around for this time of the year. Not only for clients, but anyone who kind of follows the channel is welcome to follow along. S&P 500 year to date up 18.8%. Just here for the month, up 8.4. So of course, because we were down dramatically the few months before it, almost back to where we were in the high in August. Whether we'll see another high before the end of the year, I think is really immaterial. We've done so well this year. We've kind of flattened out here for the last week and a half. If we had not flattened out, I would have been more scared than this. So, I think this year is largely going to be a wrap. I think we'll finish somewhere around where we are, but who knows? We could get a 5 to 10% movement one way or the other. I think the more interesting news is around the possibility of next year. It's interesting that if we do not get a recession, the so-called no landing, uh, then the market will probably kind of meander up or meander down. Who knows? But it's interesting that if we get a small recession or signals of a small recession maybe looming, there's a very good chance that the Fed will aggressively lower interest rates, which could cause the market to pop, do very well, because that's something we've been waiting for a long time, is interest rates to come back down. So um, that's, I think, an interesting situation in that we could have a recession could actually cause the stock market to do very well, because we have to remember that for equity markets, it is trying to predict what the stock market is going to do in the future, not what it is doing now. Of course, we could get a big, nasty, ugly recession that came out of nowhere, like most do, and we could have a nasty year next year. So, you want to know what's gonna happen next year? I'll tell you in 12 months. I did do a video on, it was called 14 charts, where it was really in this period where everyone was kind of panicking as everything falling apart. That was a great video to try and understand what was happening throughout the year. I will link that at the end of the video. In terms of kind of things to keep track of towards the end of the year. Obviously, required minimum distributions for anyone now over the age of 73. That age has changed over the last couple of years. So if you were getting close to 70 or 72 and expecting them, it's 73 now. The other one, if you're looking to do an IRA to Roth conversion, then those need to be done by the end of the calendar year. Unlike most things that deal with IRAs can often be done by the end of tax season. You need to have that done by the end of the calendar year. And then the last one would be tax loss harvesting. So if you're looking to sell some things to offset some capital gains, tough year for tax loss harvesting because we did so well in the equity markets, although value stocks are down. So if you do pick through your portfolio, there is a good chance that you have something that is down. All right. If you are interested in that video that kind of goes over the whole story really in depth, then I will link that right here. And otherwise, I will talk to you soon. Thank you.